What's going on, guys? Today I'm going to share with you the worst investment that I've ever made and how it actually ended up making me a multimillionaire. I want to start off by saying I made this video extremely focused on the potential real estate investors out there that haven't yet pulled the trigger on their first piece of real estate, or the investors that are just stuck. I want to add that this is the first video of a multi-part series showing you every single investment that I've ever made, the pros, the cons, what I learned, and what I wish I did different. I've wanted to make this series for years, and so I'm super excited to put it together and show you everything that I've learned over the last 10 plus years of investing in real estate. During that time, I have landed some phenomenal deals and I have made some horrible mistakes, and I'm hoping all of these things can help you expedite your process to get to the point where you can live off of your passive income and have the life that you've always wanted. Today's video is also going to be unique because I'm going to be talking about my first and second deal and how both of them were horrible investments, and yet both of them ended up making me millions of dollars. But before we jump into it, all that I ask you to do is hit that like button, subscribe to the channel, hit the little bell so you can catch me in future videos. And let's jump into it. I want to set the stage by helping you understand where I was at. I was in my early 20s and I'd went out to sell pest control door to door. I'd ended up making good money, and I had talked with a mentor and made the decision that I needed to invest in real estate. Now, I wasn't just confused with real estate. Before this point, I had been looking at everything, whether I should put my money into the stock market, whether I should invest in a startup, whether I should invest in real estate. All of the IRAs and 401ks and all of these different things had me all sorts of flustered. But after meeting with a mentor, I ended up to focus in on just investing in real estate. However, I was still bouncing from hard money. I was looking at opportunities with rental properties, with commercial real estate, storage units, mobile homes. All of these things were coming. And what I found is every single deal I was looking at and I was saying, oh, I don't know what I'm doing. And so I was passing on. And that was because I didn't double down and figure out what I actually was looking for. So this realtor came to me and said, look, I've got some home buyers that have found a property that has some equity in it. They're willing to put a good down payment, but they tried to borrow and the bank won't lend money to them because they're a little bit of a higher risk situation. And so at first I was hesitant, but as I looked into it, there was a lot of equity in the property. It was probably worth $150,000, and they were wanting to borrow $98,000 from me at more of a hard money rate. So we set up terms where they had a balloon payment just a couple years down the road. They had to borrow $98,000 from me at an 8.5% interest rate. And if they failed to make their payments, then I could go and take ownership of the property. Now, this was in 2015. It had a maturity date of 2018. I'm going to put this up on the screen so you can see this was the actual document that I had signed in with the title company to solidify this deal. And I had this money laying around. I had struggled to get the confidence to buy a rental property. And I thought, hey, 8.5%, that's way better than anybody else can promise me. And I feel like I've got some protection with this equity. And so let's do it. And so I jumped into my first ever investment, giving essentially what would be a hard money loan, even though for them, it was their new mortgage. Now, I want to talk about this investment for a minute because I promised you my worst investment ever. And I've made some pretty bad investments in my day, but I want to talk about how this investment and the next one I would make ended up being the worst, but also the best. Now, the reason that it was the best is I did have it backed by a piece of property. I had done my due diligence to make sure that there was equity in the property, and I was getting a return on that investment. I had an 8.5% return that I was getting in interest every year, and at the time, I thought this was a phenomenal investment. Now, the risks or the downsides of this investment is it locked up all of my money. It also was locked up in a way where that income coming from this hard money was all ordinary income, so there were no tax benefits to it. I also put myself in a very risky place because these people weren't investors with hard money. They were people that were living in the property that honestly, if a bank wasn't willing to lend to them, the odds of them not being able to make their payments were very high, in my opinion, now looking backwards. And had I needed to go and take ownership of the property, it would have been a lot messier than the realtor said it would have been, even though she made it sound like, hey, it's a great deal either way, even if they don't make their payments. I think, honestly, this realtor just wanted to get a sale put together. She knew I had money and was dragging my feet on other deals, and she knew these people wanted a house, but they couldn't get a loan from a bank. So this was very high risk, and there were lots of situations where this could have turned bad on me Fortunately for me, it ended up being an awesome investment because they made their payments every single month and they refinanced out once they were able to actually get a bank loan. I got all of that interest for I think 2 years, and then they paid what they owed back to me. I had all that money in the bank on top of the interest, and I was stoked. And one of the things that turned this into the best investment that I've ever made is seeing that check come in every single month and then seeing all of that money come back. Now, this happening is what really made me catch fire. It also put me in a place, though, where the first couple years while I had money coming in, all of that money was locked up. So I couldn't spend money on dumb stuff. I couldn't overinflate my lifestyle, even though my income was good. And I was in a situation where I was getting to see some of the good side of investing, especially once I got all the money I'd put in back on top of the interest that I got in the interim. This deal is a perfect example of, was this an optimal deal, especially compared to some of the rental properties that I bought later that could get upwards of 50% returns on my money when I was getting a 9.5% return with no tax benefits. I would say yes. I would learn to buy much greater deals, but I learned as a new investor, sometimes if you can find something that's easy and comfortable, and then you can see the returns coming in and you can see the benefits of investing in real estate if you protect yourself properly, that then gives you the guts to pull the trigger on a property that you're renting, to pull the trigger on a property that cash flows, and most importantly, to feel comfortable enough to take out debt to buy a bigger property than you have cash to afford. Purchasing this property really did make me fall in love with buying properties in cash, because it was like, hey, worst case scenario doesn't seem that bad because I don't have the risk of needing to make a payment every month. I think this concept really stuck with me for a little bit, and so I stayed afraid of debt. Even though I had lots of mentors showing me the benefits of debt, I was like, I just don't know if I'm able to do that. Now, at this time, I had a friend that was also starting to get interested in investing in real estate. He, however, was in a situation where he didn't have a lot of cash, and he found a condo where the numbers looked phenomenal. He came to me and he said, hey, I found this condo. It's on Craigslist, but I don't have the money to buy it. Is it something you'd be interested in? I figured I'd just bring it to you because I know that you had this other investment and you were interested in buying more. Now, at this point, I'd made more money from selling pest control door to door. I was about a year into that other investment and I'd seen the checks come in every month. And I said, you know what? I bet I could have the guts to invest in a rental property as long as I could buy it cash. And this is a condo for only $73,000. Excuse me, $74,000. I grabbed the paperwork and we'll throw that up on the screen here. So after looking at this, I said, once again, I've got enough cash to be able to do this without taking a loan on the property. And the numbers meet the 1% rule and then some. It was renting at $850 per month. And I thought, holy cow, this could be incredible. Let's find a good tenant. We'll get them in there. And again, that $850 a month was based on me looking at the other condos in that location that were also renting there because it was currently vacant. So I took the leap. I bought the property for $74,000 again with cash, locking up all of my cash once again and putting myself in a place where I was hoping that I could find tenants, but being put at ease because even if I couldn't, that money would have been sitting in my bank and now it was sitting in a property and I didn't have the risk or the stress of making a monthly payment. So lo and behold, I immediately found a tenant. They were phenomenal. I put them in. I self-managed. We had no issues early on. And when that first rent check hit, I thought, holy crap, what am I doing? I need to put all of my money into real estate. It also clicked once I had screened tenants and found them that this process of finding tenants, I was so scared I wouldn't be able to find someone, but all of these people wanted to rent the property from me. Not only was it not scary or hard, but it was very, very easy to find tenants to put in here. And that started to really take away my worries of having debt on a property. Because when I started running the numbers, especially at this time when interest rates were lower, I said, holy crap, if I can borrow at a 4 or 5% interest rate, I could have put 20 or 25% down on this property and 3 or 4 other properties. I could have bought all of these properties. They all would be bringing in rents. They all would have a higher return on that money that I had invested because it would be spread out into 3 or 4 properties rather than in just one. And even after making my payments, my overall return would be higher. I also looked into the fact that I'd have principal pay down that the tenants would be paying for, on top of paying for any of the interest that had racked up and still paying me with the cash flow on top. And so once this started to click, even though this investment was silly, for investing in a condo, having HOA fees, being in a place where all of my cash was locked up, also investing in an area where I would later learn I could buy duplexes and fourplexes and multifamily where I could control the market better. I could find situations where I could add value by increasing rents. There are all of these things I would learn in the future. But again, this investment was huge because I got the confidence that if I bought the right piece of real estate, I could take on debt, which meant that I could scale. I could buy more real estate more quickly, and I could put myself in a place to drastically impact my life with the income that I was having and create passive income to be able to fund my lifestyle. Now, for this specific deal, I waited a couple years, and then I was able to sell it for $150,000. And this is where things really connected for me, because it's like, wow, this first investment, I just got back the money that I put in. I didn't have any tax benefits, and I got an 8.5% return. This next investment, I was getting more than an 8.5% return in my cash flow alone. I also got appreciation because I owned the property. It went from being worth the $74,000 to being worth $150,000. This blew my mind because when I sold that property, now I had so much more to take out of it. And what really clicked here is, holy cow, what if instead of buying this property cash, I would have bought 4 of these with debt? What if I would have bought 4 of these at that $74,000 mark and literally had all of them to where I could have sold them at $150,000 and had the cash flow and the principal pay down to where I wasn't just getting back my $74,000, but the money I was putting in, I was getting back more because I had equity because it went up in value, and I had equity because of the principal pay down, and I would have gotten all of the tax benefits of all of these properties. And so at this point, even though this investment was not as good as so many other investments could have been, with using debt, with being able to find stronger cash flow, with being able to add value, it still ended up being the best 2 investments that I've ever made because it gave me the confidence to start taking on debt and to start purchasing rental properties and to know that all of the risks, the fears, the worries, the concerns were not worth my time or attention because I tried it. And I tried it in a way that I felt comfortable so that then I could figure out where my risk tolerance was, and I could push that risk tolerance to where I could acquire more real estate. Now, in that process, I would go on to buy tons of real estate. I now own over 230 units of residential real estate. I own multiple commercial buildings. I own multiple storage units, but I would not be where I'm at today had I not taken that initial leap into 2 investments that now, if people came to me, I would say, hey, those investments aren't worth your time. Don't tie up all that cash. Don't make these mistakes that I made. But honestly, I've kind of pivoted how I respond or how I interact with new investors, because I would say buying the perfect investment is much less important than getting the investment that you're comfortable with so that you can get your feet wet and actually have the courage to buy that first deal. So whether you need to save up until you have cash and just buy a condo as your first investment, whether you need to start with hard money that's backed by a property that you know has equity in it, even if you're passing up on all of the benefits of doing it the way that I would say is the best, which is in a place where you're using debt to acquire more real estate and to be able to have a stronger cash on cash return and principal pay down and tax benefits and appreciation and all of those things, I would say figure out where your risk tolerance is. Get extremely specific about what you want to find that you will be willing to buy. You'll be able to pull the trigger 100% because you've got the confidence of, hey, if I find something that meets this criteria, I'm going to do it. That is the best investment you can ever make, because once you buy it, you're going to see the worst case scenario is nowhere near as bad as it potentially could be, and the best case scenario is better than you ever imagined. And that's going to give you the confidence to go into the next property and the next property and the next property until not only are you living your dream lifestyle, but it's being completely paid for with passive income. This is the first video of a series that I'm super excited to do, and guess what? This will be the only video that we're not going to be at the property walking through seeing it, because both of these investments have come and gone, and I no longer have any ownership over them. So I can't go and walk through the properties because I don't own them. I have no connection to them anymore. They have long since been sold, and that's awesome. However, the one thing I would tell you is that condo that I sold, you probably don't even want to know what it's worth now. It's probably worth $250,000 today. But again, it was the awesome investment that gave me the jump to get into it. And looking back, I kind of wish I would have held on to it, because man, it's cool to hold on to that first one. So maybe that's the only other piece of advice I would give you. Find something you're comfortable with, pull the trigger, get into it, and then see how long you can hold on to it. Because if you start acquiring a lot more, it's pretty cool to have that first one. And that's one thing that I just don't have anymore. All right, hold on. Maybe I don't want to end the video that way, because honestly, selling that property gave me the confidence to buy a 32-unit apartment complex, which we're going to talk about that soon. And so it's not all bad to let it go, to get that equity out of it, and to put it into the next deal. Now, if you guys enjoyed the video, make sure you remember to smash the like button, subscribe to the channel, hit the little bell. Also, if you haven't heard, our event is going to be going live this week, and we only have 38 spots, so keep your eye peeled for that on my Instagram and on YouTube, because once we announce it, we're going to only have limited spots, and they're going to fill up very, very quickly. And if you're interested in being surrounded by like-minded investors, you're struggling to take that leap, check out the Creative Cash Flow Club. We've helped so many people to take the jump to get into that investment. And if you're stuck after 5, 10, 15, 20 units, it's also a great place to connect with other awesome investors that are doing great things. And so we've got that link down below. Thanks so much, guys, and have a great day.